even though I got fined a couple times there, we still appreciate it. We'd like to introduce, if we could, Casey Sidwell. She's going to explain to us some of the changes that are taking place or potentially taking place in the insurance industry. Casey, feel free to take it away.
All right. Is it possible for me to share screen?
Yeah. John, you just have to stop sharing your screen.
There.
All right. Can everyone?
I like James's
see my
background.
screen? We're good?
Yep.
Okay. Just wanted to make sure. So this month, July 2nd, we saw some changes to Michigan auto insurance in the form of reform. A lot of people are hearing about it on the news and all over the place, and a lot of PIP is personal injury protection. So if you're injured in an auto accident, and the PIP portion of the no-fault auto insurance policy will pay for necessary medical expenses. Prior to the changes on July 2nd, everybody had unlimited limits of PIP. Now that's starting to change through the month and then forward. So PIP is 4 components. It's work loss, survivor's benefits, replacement services, and then allowable expenses, which are medical, attendant care, and funeral expenses. The allowable expenses are the only portion that we're really going to talk about in terms of what is changing. Everything else is going to stay the same. And even when we see things like changes of limits or exclusion of coverage, they don't affect those other 3 things. We're only talking about the allowable expenses portion when we talk about changes. So now as we get into the year and you start to see your renewals, or you talk to an insurance agent about getting a new policy, you're going to have 6 PIP limit options, all of them, again, applicable to allowable expenses. So the first one being what we've all had on our policies up until July 2nd, which is unlimited. And unless you've made a change to that, or you've had a renewal where you made a change to that, that's what you have right now. You then will have options of 500,000, 250,000, 250,000 with some possible exclusions, 50,000 and no coverage, or PIP benefit included is how it's referred to. You take those limits of 500 or 250,000, they're going to apply to your entire policy. They're per person, and they're going to cover your named insured or multiple names insured, your spouse, so long as they are your resident spouse, and any resident relatives. There's no requirements to prove eligibility for these. The choice is yours. You can just sign off on the forms and take them. If you choose to take a limit of 250,000 with exclusions, we get a little deeper into what's going to need to be provided. You're going to have to require proof of a qualified health coverage, or QHC, you might hear people call it, that is not Medicare. Medicare is going to be called a qualified health coverage, but we're going to talk about that in a minute. So anyone excluded or chooses to exclude showing they have that QHC will have no PIP coverage on that auto policy. Anyone not excluded will have $250,000 of PIP coverage. So if we have a mom and a dad, and dad has health insurance through his employer and mom has health insurance through her employer, and the kids may have coverage under either, if one takes PIP coverage under the auto policy, they're going to have $250,000 limits. Let's say dad keeps the limits. If mom has a qualified health coverage, she can elect to be excluded, all on one policy. So now we have varying limits inside of the same policy, inside of the same family. There's a few things to really note about taking exclusions within one policy. If your health insurance stops paying, runs out, let's say you're medically injured, sitting in a hospital, and you lose your job, you no longer have health insurance, the policy will stop paying. With auto insurance, that's not true. You have continuing coverage. You have 30 days to notify your insurer if you have a loss of qualified health coverage. So that change in job, something happens where all of a sudden you don't have your medical insurance, you need to tell somebody at the insurance company as quickly as possible. If you don't do it within that 30 days, you will have no coverage from anywhere. Within those 30 days, you'll have like a grace period of $2 million worth of coverage under the Michigan Assigned Claims Program. However, that's where we start to run a risk, because the insured, the person whose auto policy it is going to be taking on that responsibility to remember, oh yeah, I got to call my auto insurance agent and make sure they know I lost my medical coverage. Today, we don't think about that whatsoever. So really important to note those. You can then take a limit of $50,000 if the named insured is enrolled in Medicaid. All other household members, in order to be on the same auto policy, will either also have to have that Medicaid, have a qualified health coverage, or they're going to need another policy where they have PIP medical coverage. So just to cover what a qualified health coverage is really quickly, it's a health plan that will pay. It's not going to limit or exclude any types of coverages for anything relating to an auto accident. It has to have an annual deductible that's $6,000 or less per individual. It's also inclusive, again, of Medicare Parts A and B, but specific to some options that you'll now have. Your qualified health coverage does not have to pay primary. And again, if you do lose that qualified health coverage, you're going to have 30 days to obtain a new plan or elect limits on your auto policy. So then the last limit, a limit of PIP benefits excluded or no coverage, is going to require that named insured to have Medicare Parts A and B. And equally, just like all the other ones, all of the household members will also need to have Medicare A and B, have some other type of qualified health coverage, or have their own auto policy with their own allowable expenses. We're seeing families who might have some adults on Medicare and some who are on qualified health coverage plans actually just split to two separate policies, because this starts to get a bit in the weeds, and it's a lot easier to have the two separate policies and then start taking $0 limits and splitting it against other options. So as I mentioned previously very quickly, you're now going to get these forms. They're going to come to you annually. You're going to see them probably 90 or so days in advance of your policy renewal, depending on how quick the mail is going to get to you. If you want to keep unlimited coverage, signatures aren't necessary. You're going to auto renew at that unlimited coverage. I'm noticing my screen is breaking up, so I'm just wondering if everything is still good on the other end. Good. Okay.
We're good. We're good, Carrie.
Perfect. So long as you get those forms and you sign them, you can take the limits we just discussed with those signatures turned in timely back to the carrier, who will make sure your agent also has a copy. If you don't sign those forms, electing any other coverage, you are renewing with that unlimited. That is the default limit. In addition to having the limits of PIP coverage, you also can now take an attendant care endorsement. This is kind of a big one. If you take a limited, PIP limit of $500,000 or $250,000, and you do have a serious accident, which most of our carriers say most auto insurance claims settle at under $500,000, 98+% of the time. However, attendant care, if it's needed for you, could run through a limit very quickly. So they're offering these endorsements to people who take these specified limits in order to help kind of cover that. And if you hit your $500,000 cap and you still need somebody at your house, you're going to want this endorsement. If you take unlimited PIP or you take $0 of PIP, there's nothing to endorse. So that's not going to be an option on those policies, but everything in the middle, it will. The MCCA has also significantly reduced their fees. So now if you take unlimited coverage on your auto policy, that MCCA fee is per vehicle will be $100 versus $220 it had been previously. If you take anything besides unlimited, so $500,000 or less, it will be $0. These are always potentially subject to change. So next year, that could be a different number entirely, but that's what it is right now. A couple of things, well, many things you're going to want to consider if you're going to take limits outside of that unlimited. Biggest thing is you need to know the plan and the coverage you have outside of your auto insurance. So you want to know your medical insurance very well, or your Medicare coverage or your Medicaid coverage. But more importantly, there's things they just do not cover that auto insurance covers no problem right now in the case of an accident. As we just talked about, attendant care, medical transport, vehicle modifications are very costly, and a big one if somebody becomes a wheelchair user, and also electric wheelchairs would be covered under your auto insurance. Therapies, rehabs, all those things that are covered under your auto insurance highly likely, very likely not covered under any of your health coverage that you have, that if you elect to use that are not going to get paid for. It's going to be your out-of-pocket expense. So you also want to think about things like copays and your annual out-of-pocket maximums, because if you were in a catastrophic accident, those are the kinds of things you could hit the limits on very quickly and need to have money to pay those medical bills. And lastly, you really want to think about if you have prior existing health conditions that could really exacerbate a medical issue in a car accident. So just things to really consider if you're going to move away from the coverage that we've typically had on your auto policy. Next change is not related to PIP. It's related to your bodily injury, which if you're in a car accident and you injure another person, that bodily injury coverage pays for their medical expenses or lost income as a result of those injuries. You also might have this for your legal coverage. We currently have a state minimum of $20,000 a person or $40,000 an occurrence. Now that has increased what we call a minimum financial responsibility to $50,000 a person or $100 per occurrence. However, just as we saw with the PIP, and the limits are going to default to unlimited if you don't sign a form or take coverage limits at or above what they're setting them for, they're going to default you to $250, $500 for your BI limits unless you select something else. And again, that's going to require one of those coverage forms to be signed and returned to your carrier or agent so that they have it timely in order to be able to put your limits where you want them. Again, those will be annual. You're going to see them every year. We're not used to having these renewal forms with our auto insurance. This is sort of just spend up, pay the bill, it happens, we move on. That's not the case. If you keep limits that are not at these minimums, these default minimums, you're going to default to them unless you keep those forms signed and returned. A new order of priority. So previously, and we're just going to stay at the top surface level of this, there were places to find coverage in an auto accident. Now you have an auto policy and you're a named insured. Your spouse, resident, has to live in your house, or your resident relative, those are the people who have coverage on that policy. That's the key here. You really need to be a named insured, the spouse of that named insured or a resident relative. And I emphasize that because that's going to be the only place to look for coverage unless we go back to talking about assigned claims programs and stuff like that, if you happen to fall in that category. So that can be a little hairy in circumstances we really haven't thought about before because we have children of divorced parents. And so our carriers are now telling us that child, if they're a driver, has to be listed on the parent's policy where they reside. Well, what if they reside at both? Well, then it needs to be the license on the child's driver's license, and that has to then follow suit to the policy they're listed on. That parent also needs to be the owner of the vehicle, or the child needs to be the owner of the vehicle with a co-titled parent in order for that to be possible. See, so we're starting to get into places we didn't think about before. Children who go away to college. Now, I know today a lot of kids are not really going away to college. We'll see what happens in a month or so here, but we see kids who go away and who get permanent residences. They rent homes and apartments 12 months out of the year. They change their address. They register to vote. They don't come home. They move all of their belongings out of mom and dad's house. There's not even a sweater hanging in the closet. So when that happens and there's no show or proof of residency left at that household for that college student, they don't live there anymore. So they're not going to be a resident relative. They no longer qualify for that PIP coverage. They're going to need their own auto policy. Anyone in your household that's old enough to drive of any category will either need to be a named insured on an auto policy, your spouse, or a relative, or they have to have their PIP coverage somewhere else. And that's really key when we talk about things that are very common these days, like boyfriend, girlfriends, fiancés, partners, roommates, any situation where we now have two driving age adults in the same household, they either need to be on their own policies or they need to have a carrier that will allow two named insureds on the same policy so that they both have that coverage. That's really important because if you don't fit one of these categories, you have a catastrophic auto accident and you come looking for coverage, you're not going to have any if you're not one of those three. The last thing that changed, well, it's probably not the last thing, but it's the last major thing, was special tort liability. So mini tort, when you're in an auto accident, the victim has a right to recover vehicle damage from the at-fault driver of the crash. It currently is on your policy at $1,000. It will up to $3,000. Most of these increases in mini tort are taking place at the renewal of your policy. I have heard that some carriers change them automatically when this went into effect on July 2nd. The communication on that was not great. So it could be one or the other. You should definitely check to make sure, but you will be at that 3,000. And that is everything I can tell you today about auto reform in Michigan, but I'm happy to answer any questions if I can.
Casey, if I could, correct me if I'm wrong, classically, if a child went away to college and they lived in a dorm, insurance folks consider that still as living at home. But if they got an apartment, then they were not. Is that still the case?
So potentially, we know that there are short-term leases on apartments when kids go away to college. And so they might only have that apartment so many months, right? And let's say they don't have laundry facilities in the apartment building. They might still be coming home doing their laundry. They have a bedroom. They have things in the closet. There's furniture there. That's their space. They're a resident. We have actually been told in a lot of the training for this that might actually be the deciding factor if your child is a resident of your household. Do they have a bedroom or a bed to sleep in if they come home? I don't know who's going to go look, but that's an interesting qualifier. If they have an apartment, that's a not so black and white situation. So maybe if they don't live there full time and they do come home, they would be a resident of your home as long as they didn't go changing their license and registration to vote and things like that.
Thank you. Anybody else with any questions, Casey?
So
I'm certain that Casey or her father will both be available for questions down the road. I can tell you that they are my insurance folks for everything that I have, and they've always been really, really good as far as answering questions that we may have. Thank you so much for your time, Casey.
We had a question
wait,
come
hold
in
on.
via chat.
Yeah.
So one of the complaints with the old system is that insurance was required to pay the full price of medical coverage. There was not a negotiated rate like Blue Cross or other carriers have with medical providers. Does the new system address that at all? Do you know?
Yes, it does. Not currently. So you'd think, wouldn't that be the first place to start? As insurance agents, we all went, really? You want to change all of the rules about this, and that's the thing you address way down the road. 2 years from the time they set it in motion is the time they set as a requirement for what we call a fee schedule to be put into place for those medical providers. So that's a really good question, because a big part of why we pay too much for auto insurance in the state of Michigan, and we absolutely do, is because nobody is controlling. If you break your foot and you need an x-ray because you broke your foot mowing your lawn, it might be $200, let's pretend. If you break the same foot identically and you need an identical x-ray because of an auto accident, it might be $2,000 because there's no controls in place for those. So that's a huge abuse of the system and a huge part of the cost we see passed on in those premiums. It is being addressed.
Casey,
right
I
away.
have a question.
Yeah.
This is Dino. I have 2 cars that are garaged for 6 months out of the year. Seasonal home on an island in the middle of Lake Michigan, where the total mileage in 1 year between both cars combined is less than 100 miles. Why do I even have to have PIP?
So if they're garaged,
Yeah, they're garaged for 6 months out of the year. It's a seasonal home. It's shut down.
and you put garaging coverage on them when they're not in use.
Well, I was told that because I have a separate personal liability policy, I have to have one car as if it's on the road. And for that one car, I'm paying $1,700. I can just cancel the insurance, can I not?
Do you have state registration on the vehicles, plates?
Yes.
That's where you run into having to have some type of proof of coverage, even if it's storage coverage, in order to do that. Do you have vehicles locally here that are not on that island?
No, I do not.
Okay, and that could be the other part of the problem. That's a great question. I don't know the specific answer. I think my dad might be on here and have a better answer than I do to that question. Because realistically, you have to be able to have some type of coverage on some vehicle that you drive because you're a licensed driver and you have cars. But to require that, the other option I'm thinking is if you are a Medicare recipient,
I am.
Parts A and B, you can actually at this point call your agent today and exclude that PIP coverage with proof of your Medicare. They're going to probably, you know, the red, white, and blue card they give you with your Medicare coverage for A and B, you're going to give them a copy of that and they should be able to remove it.
Yeah, see, I've got Medicare backed up by Blue Cross Blue Shield.
That's great. That's fine. Just as long as you have the base product first and then you take your advantage or supplemental plan on top of that, either way.
So you're saying there's a possibility because I'm a registered driver and I have a driver's license, I have to pay insurance on cars that just sit there for 6 months.
Because, yeah, because they have state registration and plates and things like that on them, technically speaking, the state thinks you could turn around and pull them out of a garage tomorrow and drive them down the road, whether you had in coverage or not, because you have your tabs.
Can I interrupt?
Yes.
I think, Dino, what the issue is, maybe your umbrella policy requires that you have a auto policy with liability on it. And tell me if I'm wrong. How do you get around on a daily basis? What do you drive?
I'm driving my daughter's car.
Ah, okay. I'm thinking there's no reason in the world why you couldn't remove that all the coverage except comprehensive that I'm aware of, except that maybe your umbrella carrier would prohibit you from doing that.
The umbrella carrier is the same company.
Yeah.
Right.
Well, and I don't even see why, under those circumstances, why that would be the case.
Yeah.
With you.
Did your
They
daughter?
want you to have auto liability. What you probably could do is buy a non-owned auto liability policy, which provides liability insurance only for you to drive unowned vehicles. That might solve the problem. You might talk to your agent about that. Without knowing in depth what the issue is, I'm thinking that's what it is right there. It's
Okay, thank
by
you.
your umbrella.
You're welcome.
Anybody else with anything? All right, as I said before, I'm sure Casey or Kurt would be more than happy to talk to you another time if you had a more in-depth question or one you didn't want to share in public. But Casey, we thank you very much for your time. I can tell you that I was taking pictures of your screens because, as it happens, my daughter called me with questions this morning. And I was like, okay, these are answering my daughter's questions. I'll send those to them. So thank you very much.
You're welcome. Cam, if you'd like, I would gladly send you a copy of the presentation. I also have some other like cheat sheets that we use from our carriers that might help answer your questions as well.
I think
I think they recorded this all. Yeah.
I'm hoping that taking the pictures of the screens and sending them will answer your questions. Thank you very
Perfect.
much.
You're welcome. Thank you.
Anybody else have anything to bring before the club? John, hit the bell. We are adjourned.
All right.
Goodbye, everybody.